Good evening, it's Adil bringing you an intermarket analysis review of the US markets. And what exactly does today's price action mean on the Tuesday, the 6th of January 2015? And this is for the 7th of January 2015 and the trading week ahead. Okay, that's basically where we are at. Okay. Right then, so basically where are we? Okay, so fundamentals first of all, as always. Overnight, I've already covered this in the UK market analysis. As we all know, the Hang Seng was negative, Shanghai was positive, and the Nikkei obviously got butchered, minus 500 points overnight, down almost 3%. Okay, the Athens Stock Exchange continues to drag and obviously hurt sentiment, and certainly obviously European markets are all down as well, as you can see here. The German DAX, I mean, it was flat eventually, but has sold off in the futures market, and with regards to the rest of the US markets as well. Okay, so basically where are we in terms of fundamentals? Okay, so we come into today with the Asian markets down again. Risk off scenario. We had stronger Chinese data, stronger Japanese data, stronger European data, although UK data was relatively weak, and that basically did stabilize the markets initially. But Brexit phase took over, markets started to sell off with regards to concerns of Germany having 24 billion exposure to Greece, and with regards to Mr. Tsipras and the comments to and fro. Also, there was an article with regards to the QE, whether or not Germany would actually go and opt for QE, as in the central bank taking the majority of the risk as opposed to national banks. Okay. And also there was a third option. So first option, obviously the European Central Bank taking all risk when they buy bonds. Then obviously the second option was they only buy AAA rated bonds, and obviously the third option was national banks obviously take on risk themselves. And realistically, that's not really going to work because I think that more or less is occurring anyway. Okay, so there was an interpretation or misunderstanding. Call it what you want. Okay, the market obviously sold off based on that news and Brexit fears as well. Okay, so now the other factor as well, the reason why the market started to sell off quite viciously, is the fact that oil prices continue to make new lows. We started off around the 52 and started off around the 50-51 level, and obviously the markets are printing a new low around the $47-48 on oil. So again, that obviously triggered a sell off as well. Right, now let's see what the situation is with regards to Greece, okay, because the other factor as well that we need to consider is the weak ISM data that came out today from the US, okay. That obviously caused caused the move downwards to exacerbate. As soon as the US composite PMI came out and the services PMI came out and factory orders came out, the market started to sell off en masse. Okay, so that certainly isn't a good sign, okay, with regards to the US markets obviously selling off quite substantially. Okay, so they all came out weak and the markets have obviously exacerbated the move down. So now let's have a look at the technical damage that's been done. So let's start off with the Dow Jones. Okay, Dow Jones has held support. Okay, the FIB 75% support has held, the diagonal trend line has held, therefore I am in the bullish camp with regards to Dow. Okay, let's have a look at the smaller time frames, see if we can look for any potential bullish pattern with regards to Dow. Nothing really other than this horizontal support line. Obviously, if that fails, the next support line is around this region here, and let's see exactly what transpires with regards to this. Okay, 10-minute chart, see if there's any potential bullish pattern going into the close, other than the fact that we can argue here that we do have a potential here for inverted head and shoulders, provided like I said, this is a higher low and then the market reverses. So that's something that we're going to keep an eye out for with regards to going into the following days trading, and a lot of it basically hinges on the Asian markets and see how they react. Okay, so the Dow certainly has held on support. Let's confirm that with the Dow Transports. Okay, so let's go to our daily chart of the Dow Transportation, and as you can see, we have broken this trend line, so again that's a potential negative scenario. We are holding previous resistance equals support, and obviously this pivot low here. So that's interesting scenario. Okay, so we obviously failed to hold the FIB 75%, and it's all about holding this horizontal support line going into tomorrow. Obviously, if that fails, then the next test is going to be a 200 MA. or potentially lower. So again, these are all scenarios that can occur and we need to remain open to them. But we are into horizontal support with regards to the Dow Transportation Index, therefore we are looking for a bounce going into tomorrow. Okay, the next chapter we look at is the S&P 500. S&P 500 very bearish. Certainly, I mean, given the fact that we've broken this key trend line, we have to ignore that for now. Let's just presume that the 75% has held. I did expect this gap fill level to hold, which I am concerned about. Obviously, 75% has held, so I will give it the bearish, the bullish slant going into tomorrow. From my perspective, given the fact that we have held a 75%, but again, it's a weak hold, and we'll have to see what transpires tomorrow. Obviously, if we get Asian markets higher and we get some strong economic data out of the Eurozone, then obviously that may well put a floor in the market. So what are we looking for? That inverted head and shoulders formation failed to transpire, given the fact that, I explained, the weak ISM data and the factory orders number that came out. For now, we focus on this inverted head and shoulders. So provided the Nasdaq holds this 75% or 61%. So provided we hold 2001 and 1998 on the 1998 and 2001 on the S&P 500, and we put in a higher low, and the market reverses and creates this inverted head and shoulders pattern, which again has left an unfilled gap up here. As you can see, we have an unfilled gap at 2057, and that's a 200 MA. So that will certainly be a scenario. The 1992 was a low going to the 2020 region, so you're looking at a 30-point move. So you're looking at a 30-point move, which takes you to 2050 level. And like I said, 2058 is the gap fill support, gap fill resistance with regards to the S&P. So it's like 2000. If 2000 holds, then yes, I will remain in the bullish camp. If 2000 fails and the market starts to go below, starts triggering off stop losses, then obviously that's a different scenario altogether. Okay, so let's have a look at the Russell now, just to confirm the move on the actual the FTSE, also the S&P 500. The Russell 2000, here we go, Russell 2000. Okay, so we failed to hold that horizontal support line, failed to hold a 61%, and we've actually breached below 75%. So that's not a good sign, folks. Okay, we failed this key trend line as well. It's not a good sign. It's all about this horizontal support. If that obviously goes, then the next level that we're looking at in terms of support is going to be gap fill, and then this horizontal support down here. So it's not a good sign. It's not a good sign. Although, having said that, you have left an unfilled gap above, so that potentially needs to close, and we'll see exactly whether the market can actually close that. So again, keep an eye out for that. Okay, so it's not a good sign with regards to the Russell failing to obviously propel higher. Okay, right, that's the Russell. Let's just have a look at a 10-minute chart. The Russell, see if there's any potential bullish scenario. Nothing really. 60-minute chart, are we into? I mean, you got horizontal support here, double bottom. So again, certainly an argument there for a potential bounce, and that obviously feeds through for the S&P 500 playing out its H&S formation. Okay, again, Russell 3000 bearish, given the fact that we failed to really hold at 75%. The only other plausible work for the Russell is double bottom, and obviously 200 MA above, and that should 200 MA below, and that should potentially hold the market. For now, this previous resistance here equals support for now, and we'll see exactly what transpires. But that's not exactly a bullish scenario, so I won't be getting excited as of yet with regards to the move higher. Okay, that's basically where we are with regards to the Russell. So certainly an argument there overall. Technically, yes, you are looking for a potential bounce. How long that bounce lasts and whether it's sustainable, again, will be dependent upon the market and economic data that follows. Obviously, the key component is oil. That's basically what this whole market is living on right now. Oil falls, market falls. It seems to be some sort of risk barometer at present, and obviously USD JPY as well, and Euro JPY. So, okay, next one is the Nasdaq. Let's have a look at the Nasdaq. Okay, so Nasdaq itself, we are into double bottom territory. So we obviously held at double bottom, potential horizontal support of 4087. So again, potential negative, potential positive scenario given the fact that you got an unfilled gap there. Although you do have an unfilled gap below, so we are vulnerable to 4050 as well with that gap closing, and that will be dependent upon economic data. 60-minute chart, obviously horizontal support or double bottom held at 4091, so we have to respect that for now. 10-minute chart, it's not exactly bullish from that perspective. Obviously we failed the inverted head and shoulders pattern, And where do we go from here? Okay, so we basically are looking at this pattern here, left shoulder. Okay, you've got the head and this right shoulder potentially going in right now, and again it'll be based on the fib. So you're looking at the fib, take the pivot low, take it to the gap, take it to the neckline, and obviously you're looking at 61% to 75% holding. So provided the Nasdaq holds a 4105 level, I will remain bullish and I expect to move higher, potentially to gap fill up here at 4228. Okay, that's my thesis. Now, will that be supported with the semiconductors? Let's have a look. Okay, semiconductors 10-minute chart, double bottom scenario. Daily chart, still we are into potential gap fill on the, sorry, this is a CAC, so let me bring up the semicons. What am I doing? Okay, so semiconductors not looking good. We've failed to hold that previous resistance equals support line, so again slightly negative, or certainly an argument there for a negative scenario. You've got previous resistance equals support here, previous resistance equals support here, so we're holding on to that for now. So certainly an argument there for a potential bounce. 60-minute chart, you're looking at H&S formation obviously complete. You do have a horizontal support zone, given the fact that this is complete now. You do have a horizontal support zone up here, although that has become vulnerable to a potential sell-off. You've got support here, previous resistance equals support there, previous resistance equals support here. So there is a potential support zone, and we have put in a bottoming tail on the 60-minute chart as well, which needs to be respected. And let's see exactly how this transpires for now. Okay, not exactly looking bullish there, especially into the close. So the biotech, let's see a slightly different scenario here. We still have the opportunity here for inverted head and shoulders, because the right shoulder is still holding the 61%. Provided that holds and does not fail to break below 75%, then there's certainly a bullish argument for the Nasdaq as well going into tomorrow. So if that's the case with regards to US markets, overall they are holding support. Again, like I said, it will be based on USD JPY, Euro JPY, the Nikkei and the Shanghai move overnight. Obviously news flow going into tomorrow, we have a lot of news flow from Europe, okay, and eventually we have from the US FOMC minutes. Obviously that will be a big mover, and that will dictate the movements in the markets with regards to interest rate expectations. And we'll see exactly how the market transpires, although the weak US data will certainly weigh. So it's going to be an interesting day tomorrow. But from my perspective, this setup is potentially bullish for a move higher. How long that move lasts, again, is debatable, and we'll see exactly what transpires. My only concern today is the fact that we've on the S&P we have done a lot of damage. Although having said that, I mean the 60-minute chart on the S&P, which chart was that now? Was it a 10-minute chart? Oh no, okay, daily chart basically is not. I mean, it's holding on, just about holding on to its dear life at 75%. From my teaching, provided 75% holds, the market still remains into higher high and higher low territory. If that fails, then obviously a 90, 70 hours next, and then obviously potentially a 200 MA as well. Okay, so again, it's all about economic data, how Asia reacts, the price of oil, and so on and so forth. Okay, so for risk on, risk off.